watch slash wallet slash handbags slash every kind of fashion accessory you can think of company, and that's Fossil, on an absolute tear, up 265% just so far year to date. One thing, though, worth noting, Melissa, each of those stocks has relatively high short interest, so that could very well be part of that bull run story as some traders try to buy to close out those bets against those shares. Back over to you.
All right. Thank you very much, Dom Chu. And the Chartmaster says one of these stocks' run is done. So, Carter, what are you looking at?
Look at WWE. It's off the top rope. Quite something. But here, to put it in perspective, the number one and number two best performing stocks in the S&P 500 over the past 12 months, while WWE is up 270%. Let me show you a 2-3 year chart just to put these three names in perspective. So basically, plus or minus, all three up 300%. You can see the actual numbers here, 300, 299, 307. But the trajectory, and what's key is that, see, WWE plays this huge catch-up, right? It's done that. Now, let's zero in on the chart itself. But first, look at that. It's a 10-bagger to the S&P 500, right? That's what winners are all about, finding something, that's the dream, that beats the bench handily. Let's go to the chart itself. All right, this is back to 04. I just want to compare this current run with this current run. Right? Take those lines away, take a look at this. And what we have is how far above the 150 moving average. Again, how far above? And is it reasonable to think that you're going to get a check back? So take a look at the next chart. This is exactly 90 weeks. This is exactly 90 weeks. This one's even a little bit more than that one. And guess what? It just got an upgrade this week. It's had the news that we know in terms of lucrative TV deals. So what's next? It has to maybe grow into those things. I think if you have these kind of gains, it takes some profits, maybe right options. It gets to do something.
Smackdown, Mike, what's your trade?
You know what I'm wrestling with? How is it going to grow into it? Okay, this is a name that's growing revenues at, mid to high single digits. That's very respectable. It's growing EPS at mid to high single digits. Again, that's very respectable, but it's trading at almost 70 times forward. Earnings. Netflix is growing revenues at 30 to 40%. It's seeing EPS growth of 100 to 200%. So you can understand that move a whole lot better. Something else I don't understand is the price of options. The price of options in World Wrestling right now are about 30% above their average. So I think the way we want to make this play right here is to buy the August 75-65 put spread. When I was looking at this earlier today, you could buy those 75 puts for $3.60, sell the 65s against it for $1. That's a net debit of $2.60, just a little over a quarter of the difference between those strikes, or about $10. This will capture earnings, which they are going to report the week after July expiration, which is the reason I'm looking out to August. Otherwise, you have to go much farther out. I can't really get my arms around the stock. It does have a 16% short interest, which might be what Dom was alluding to and might be what has propelled it this far, but I certainly wouldn't want to bet that it's going to go any further.
You like this trade?
Well, to Carter's point, do something right here, right? Because the stock has had such a huge run is the right answer. I actually like this stock a lot. On our quant model rankings, it's 9 out of 10 for us. The enterprise value to sales ratio is actually relatively cheap versus some of these other peers we've talked to.
So what would your trade be?
Not cheap, but relative to some of these other names that Carter mentioned here.
So what would your trade be?
So I would stay long the stock, but I love Mike's trade in the sense of buying a put spread to hedge yourself here. The stock has had such a big move here, and Mike makes a point about the value of options being so high. A put spread is cheap right here. It's a great way to hedge right now.
The model, and everyone's got models, and I'm sure yours is robust. Just since I don't know, a 9 ranking for that, by comparison, what is like a Netflix rank or an Amazon? Do they get as high a ranking?
Well, when you talk about some of those names, too, you have to be a little bit worried that the growth will continue with some of those names. Obviously, WWE has had such a huge run up, you worry a little bit also with there. So some of these get out of whack once you reach these lofty levels that the stocks have. And to that point, that's why I love buying the put spread as a hedge here, because there are some concerns like you talk about here. There are concerns whether this stock can continue to move like this. But when we've seen decent growth and relatively versus some of the other peers, that enterprise to sales ratio, I think it can still perform
at 7x
here.
sales. I don't know.
Yeah. Well, hey, that's been the play on a lot of stocks this year. When you look at those huge growth names, Netflix, you mentioned already, up huge. So I think it continues.
All right, up next, got an options question for one of the traders? I know you do. So send us a tweet to @OptionsAction. If it's a good one, we'll answer it later on in the show. And let's get a check on our Cramer Cam as we head to break. We're not the only ones talking Pepsi tonight. The Madman taking the Pepsi challenge and discussing how it could set the tone for next earnings season. That is at the top of the hour. We are live at the NASDAQ market site. Much more OA coming up. Welcome back to Options Action. It's time to take a look back at some of our open trades. Just last week, Mike said shares of Tesla were heading for a crash.
The stock has a very big short interest. That short interest can actually create a possible level of downside support. You could spend about $21 to buy one August 330 put. You could then sell two of the 295 puts against it for $10.50 each.
And Mike was right. Tesla's sinking nearly 12% since the time of the trade. So what are you doing with the trade right now, Mike?
Well, right now I'm staying with it. Because we sold 2 puts, what has happened actually is essentially nothing to that spread. We actually need time to work with us right here. If the stock finishes somewhere below that 330 level, this will be a profitable trade as long as it stays above 265. And that's really what we're targeting. Right now, we're kind of in the sweet spot. We just need a little bit of time to pass so we can see the value of those 295 puts we sold continue to erode.
What would you do, Brian?
Well, I think when you look at some of the technicals on the charts, it does feel like it's maybe going to hold this level and sit around here. So to Mike's point, wait for some time to work for you. I like doing that as well. Here, I think that will eventually pay off and get you some of that decay in options that occurs as you sit around that short strike that you're short here. So certainly, I think you got to let it work a little bit here at least, and then maybe decide right before earnings whether you want to continue on with this or not.
Also last week, Dan said Morgan Stanley was gearing up for more pain ahead.
If you look at the one-year chart, I think there's room back to the 44 level. That is the 52-week low. That maybe it finds some support. You could buy the July 48-44 put spread, paying $1.10 for that.
Well, shares of the big bank are down more than 2% since the time of the trade. As you may have noticed, Dan is not here today, but fear not, we were able to catch up with him all the way out in London, England, for a special update on the trade.
Hey, Options Action viewers, it's Dan from London. Last week on the show, we detailed a put spread in Morgan Stanley when the stock was just below 48. It was the July 48-44 put spread. At this point, with the stock just below 47, that put spread is worth a little more than $1.65 for almost a 50-cent profit. I think at this point, you stay with this trade. You're keeping an eye out towards earnings in a couple weeks. Have a good weekend.
Isn't it amazing? God Save the Queen plays all the time, everywhere in London. I mean, it's incredible. By the way, we'll see Dan next week back here on the desk. Carter, what do you think?
It's an unmitigated disaster, right? I mean, you're talking about a stock that's down 22% from its peak, and this is an environment. It's just the market beta trade. The market is struggling of late. Morgan Stanley is just a beta trade on that. Couldn't come to life. Something's wrong.
All right. Up next, we got your tweets and the final call from the options pits.